Hey everybody, welcome to the first module of the Homebuyer Success Academy. This is a program that I have put together over the last 7 years. I've been working on this tirelessly to try to mostly help first-time home buyers, but it's also for step-up buyers, retirees, veterans. There's all sorts of people that this is available for, and it's got such good golden nuggets of information. You don't want to miss out on this. You can skip around in this course. You can get yourself through the program quickly. I suggest that you take your time with this and try to learn as much as you can in the real estate market. Been in the market now for 17 years, buying, selling, investing, commercial, rural. We do residential in town. We do all sorts of real estate. So the first module is all about, are you ready to buy a home? And this is kind of set up to get you started on before we even get you into a mortgage broker to see whether or not you can even get qualified, because there's nothing worse than getting yourself into a mortgage broker and then finding out the hard way that you just aren't going to qualify. But are you financially stable? So I'm going to read this as closely to the words as I can. I have a tendency to jump around off script, but I want to keep this as scripted as possible because I have spent the time to create this, but I still jump around. So I'm going to try to read this as close to the script as I can. So take a look at your savings, and do you have between 3 and 6 months worth of living expenses? Now, you need emergency funds put away. This is for, after considering the upfront costs of buying a home. Obviously, when you're buying a home, you're thinking about your down payment, you're thinking about the home inspection, appraisal fees, insurance on the home, moving costs, legal fees, and the lenders are going to want to see stability. So they're going to want to make sure that after you put down your down payment, that you're not broke. They want to know that you're going to be able to at least cover the expenses of this place for at least 3 months. Now you need to calculate what your current monthly expenses look like. So try to account for every dollar, and the calculation will show you how much you can allocate towards mortgage. So look at what you're paying for your rent if you're a first-time buyer. Look at what your existing mortgage is if you already own a home, and take into account the utilities, your food payments, your car payments, and your maintenance, student debt if you have any loans from student loans. And if you've got children, obviously you're going to have some clothing costs and you're going to have extra food costs. You're also going to have activities for the kids, and you're going to want to go on a vacation. So you need to look at some of your entertainment costs as well, because they really want you to go on that vacation every year. So one of the things that the lenders are typically looking for is they're looking for a 2-year stability in your income, which means that you've been on the same job, everything is going great, and you've got good, stable income. And this is what they're looking for. They're looking for that stability, and they know that you're going to be able to make those payments because that income isn't going to change anytime soon. Now, there's going to be some home maintenance, regular home maintenance that you're going to have to deal with. As a homeowner, you are the landlord. You're no longer going to be able to call the landlord and say, I need you to fix the plumbing. That is now your responsibility. You are now the landlord of your own home. And so you have to be prepared and make sure that you've got the savings to cover the costs of anything unexpected that may come up. Now, how much would you be spending each month if you included home ownership expenses into your monthly budget? That's one of the things that we have to calculate and figure out for you. So one of the biggest things before we take you in to see our mortgage brokers is we want to make sure that your credit is strong. Now, there's a few apps you can go online and you can do a credit check. We've talked about this earlier, but they're looking for 650 and higher. If you're not there and you don't have a lot of debt load, then you may still qualify. But again, we have to understand what your credit score looks like. Now, what makes up your credit score is obviously your payment history, that you haven't been consistently missing payments, the amount of money that you owe, the length of the credit history that you have, the types of credits that you use. Are you mostly credit card debt, or do you have some vehicle payments? Do you have student loans? And how often are you are you looking for credit? Are you looking for it often? They're going to want to know that. Every single time that you go to a credit card or a bank or something, They register what they call a soft check or a soft look into your credit, and that registers on your credit rating. It doesn't necessarily bring down your credit score, but it will still register that you've been pursuing new credit. So how do we improve your credit? We want to make sure that you're paying your bill on time and that you're staying within the limits of your credit card. Now, a lot of credit cards that we have today will allow you to go above and beyond your credit maximums. Not a lot, but some of them might do 5% or 10%, and really they don't want to lose you as a client, so they won't let that $50 payment, they won't reject it, they'll allow it to go through. So, and one of the things that we're also trying to do when you're looking to get pre-approved for a mortgage is don't be applying for new credit and don't be going out and buying a new car. So this is the first module. Thank you very much. My name is Frank from Hanlon Realty. I really look forward to you coming on to the next module, and let's do that now.